Oil up, yields up, stocks down. The Middle East is back on Wall Street's radar. Hey everyone, it's Tuesday morning, August 18th, and welcome back to Capital Markets Quickie. I'm your host, Endrit Sella, here to break down yesterday's market action in just 2 minutes. Quick note before we dive in, today's episode is brought to you by AMF Capital, Asset Management, Frankfurt. Learn more about our funds and strategies at amf-capital.de. All right, let's get started. So, the new week started with a step back. Renewed fears that the war between the United States and Iran could flare up again sent oil prices higher, with WTI crude jumping 2.6% to around $84. And that combination, well, stocks really don't like it. The Standard & Poor's 500 fell 0.5%. The Dow lost 0.5% as well, and the Nasdaq slipped 0.3%. The bond market added to the pressure. Treasury yields climbed across the board, and the 30-year yield even hit its highest level in decades. Ouch. So, what could turn the mood around? Well, this week actually has plenty on the calendar. Walmart, Home Depot, Target, and Lowe's all report earnings, and on Wednesday we get the minutes from the Federal Reserve's July meeting. Over in Europe, the day started friendly but faded along with Wall Street. Germany's DAX closed 0.3% lower, pulled down by consumer names like Zalando and Adidas, which lost 3% or more. The bright spot? Rheinmetall. The defense company gained 1.3% after landing an order worth more than 500 million euros from the German armed forces. The Euro Stoxx 50 ended just barely in the red. Asia, meanwhile, actually had a good day. The Nikkei climbed 0.7% to a fresh record and is now knocking on the door of 70,000 points, driven by chipmaker Kioxia, which exploded 15% higher on booming demand for artificial intelligence memory. Hong Kong's Hang Seng added 1.6%, while South Korea's market was closed for a holiday. So geopolitics is back in the driver's seat. But with big retail earnings and the Fed minutes ahead, this week has plenty of chances to change the story. All right, that's it for today's Capital Markets Quickie. If you found this helpful, hit subscribe and stay in the loop. Cheerio!